What's up everyone, and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. If you're watching this video, chances are you've at least heard of Workhorse and have seen the share price skyrocket late in June spilling over into early July. You've also probably seen the stock hit a brick wall and start trending downwards for the last 3 weeks. And if you bought near the top, now you may be wondering if you should cut your losses. If you're an early investor, you may be tempted to jump off the horse. Pun intended. If you haven't already taken your profits. And if you're new to this stock, you may be wondering if Workhorse is worth the risk, or was it simply a pump and dump stock that has nowhere to go but down? If you fit any of those profiles, don't worry, I got you. In this episode, we'll be catching up on the latest Workhorse news and we'll be taking a deep dive into whether Workhorse is a good buy at these prices, what important catalysts have the potential to skyrocket the share price or make it fall off a cliff. I'll also share my current thoughts on Workhorse and what I'll be looking to do over the next few weeks. So without further ado, let's get into the video. Let's briefly refresh our memories about what Workhorse actually does, because I see a lot of people panicking out there. Knowing what you own is essential to investing successfully. If you don't understand the companies you're investing into, especially smaller cap stocks or mid cap stocks which see a lot of volatility, you are bound to stress yourself out, doubt yourself, and worst of all, panic sell at a loss, only then to see the stock bounce back up. Alright, so Workhorse is focused on providing sustainable and cost-effective drone-integrated electric vehicles to the last-mile delivery sector. What most people may not know is that Workhorse was actually shut down from their original operations, which was not electric vehicles, but chassis. The company only became the Workhorse you know today when AMP Electric Vehicles came in and bought Workhorse's IP, patents, logo, brand, and assembly plant, with the intention of building alternative fuel delivery vehicles on Workhorse chassis. Just a little fun fact for you. As most of you already know by now, Workhorse is one of 4 remaining participants bidding for the $6 billion USPS contract that's up for grabs right now. Workhorse CFO Steve Schrader strongly believes that Workhorse's all-electric vehicle option is the best option because it is more like a golf cart and it will thrive in the stop-and-go routes the Postal Service does. Think about this for a second. They have to stop around 700 times per day and they only travel about 17 to 18 miles per day. If we compare that with their current fleet, USPS would get the equivalent of over 40 miles per gallon with Workhorse's vehicles as opposed to only 9 miles per gallon with their current trucks. In addition, USPS is in a boatload of trouble financially and they desperately need to cut costs any way they can. And President Trump hasn't been shy about his thoughts on the situation, calling them a joke for losing money every time they deliver packages. In fiscal year 2019 alone, the USPS lost a staggering $8.8 billion. All that to say, USPS is not doing well financially, and Schrader is confident that Workhorse can be their solution. He is optimistic for a large portion of the contract at minimum. Needless to say, closing this contract would be a landscape-shifting result for Workhorse and propel them towards future success. Speaking of Trump, the elections, as we all know, are coming up shortly, and I need to mention that there is a relationship between Donald Trump, Mike Pence, Workhorse, and the state of Ohio. As Ohio is a crucial swing state for the Trump administration, investors are betting on them wanting Workhorse and fellow Ohio-based affiliate Lordstown Motors to succeed. It's worth noting that the first presidential debate has been moved to no other place but Cleveland, Ohio. This event will take place on September 29th, and this will be something I'll be tuning into for sure. Not only for the entertainment, but also because if Trump talks about Lordstown Motors or Workhorse in front of the hometown crowd, this could be a huge catalyst for Workhorse. Look no further than what happened to Kodak stock this past week for how much power a Trump statement has. If you somehow missed the craziness, Trump announced that Kodak would be getting a $765 million loan to produce drug ingredients to treat the illness. After Trump's tweet, Kodak shares, although short-lived, did at some point jump 2,441% in just a few days. Point being, the man has a lot of power, so I'll be watching. Okay, let's talk a little bit about Lordstown Motors and how they are affiliated to Workhorse, you may be asking. Well, Workhorse has a 10% stake in Lordstown Motors Corporation. The deal came about when Workhorse gave Lordstown Motors access to their intellectual property. Both companies were actually started by Steve Burns, who's now the CEO of Lordstown Motors. Lordstown Motors came out with a stunning commercial yesterday, very reminiscent of a Ford ad you'd see on TV, and honestly, it looks great. Good news for Lordstown is good news for Workhorse. In addition, there have also been some rumblings that Lordstown may be acquired via SPAC in the near to not so distant future. So I will be keeping an eye out for that, because that would be another big catalyst for Workhorse. Drones. Okay. Workhorse estimates that using their autonomous drones for last mile delivery would result in a large price reduction to just 4 cents per mile. Just to put things into perspective, a gasoline-powered delivery truck now costs $1 per mile. With the pandemic forever altering the way the world is run when it comes to online shopping and delivery, it's clear in my mind that the drone space could become a much bigger piece of the puzzle if Workhorse can execute. I don't know about you guys, but many of the people I know have already made the permanent switch to online delivery. And what this illness has taught us is that people want to move away from physical contact and the spreading of germs whenever possible. We're already on the path of doing this with payment solutions, and I personally see deliveries following not far behind. As Schrader has stated, he thinks that drone delivery is closer to 2 years away rather than 5 years away. Of course, they will need approval from the FAA, but with the increasing outside pressure, I see this happening sooner rather than later. Last but not least, Cathy Wood likes Workhorse. Okay, that's it. That's it. Cathy Wood likes Workhorse. I'm buying it. I'm joking, but if you've been keeping up with Tesla, then you'll know who Cathy Wood is. She's the one who has been extremely bullish on Tesla for a very long time, citing price targets that shocked people initially, and still do. Cathy Wood runs a company called ARK Invest, and their ETFs have been absolutely destroying their competition over the last 5 years. ARK Invest invests in disruptive innovation, and guess what? ARK Invest has recently added over 400,000 shares of Workhorse to their ARKQ ETF. Although it currently represents just 1.48% of the ETF, this is big news. It seems as though everything Cathy Wood touches recently turns to gold. And I like my money, so I'm not betting against her. Let's take a quick look into the financials, but I'm warning you now, it's not the prettiest. Workhorse actually posted a net profit for Q1 2020, but it wasn't due to sales, it was almost all interest income. Over the next few years though, and especially if they win the USPS contract, that will ultimately change. Also a stain on their balance sheet is their current ratio, which sat at 0.61 as of last quarter. Not exactly something you want to see. Generally, a current ratio higher than 1 is considered okay, as it signifies that the company can pay off their current debt if they're put in a bad situation. However, in late June, Workhorse entered a financing agreement with a single institutional investor for a $70 million senior secured convertible note, which gives Workhorse the financial flexibility it absolutely needs to pursue its endeavors. So although the numbers didn't look good in the last financial statement, they're a little misleading and they don't really mean all that much. And I gotta say, I think they've got everything they need to make things happen. Before giving you my thoughts, let's sum up. So Workhorse is a company that started making van chassis, was bought by another company, and is now developing EV commercial delivery vehicles as well as autonomous drones. So let's get into what I'm doing. I actually bought into Workhorse quite recently, as I never jump into a stock prior to doing my research. And as of right now, I own 90 shares of Workhorse at a cost basis of $17, so I am currently down on this position. But if the price dips below $14 for any reason, I will be doubling my position. And if the price goes below $12, then I will be loading the boat. However, it does seem as though Workhorse has hit support around $15 for the past few weeks, which kind of indicates to me that it is getting ready to take off with any positive catalyst. I do want to reiterate that this does still remain a speculative investment, as there are no guarantees here. Granted, I do believe it's highly unlikely that Workhorse gets no part of the deal, and so I think we're going to see some positive news on that front. Personally, I think Workhorse is just getting started, and I also happen to be bullish on the drone delivery space in the years to come. Realistically, I think we can easily see the $25 to $30 range if all goes to plan, and I'd set a high of around maybe $40 this year if Workhorse was to get the whole USPS deal. Keep in mind that this is not to mention any other catalysts that we spoke of. So I think in the most bearish of cases, the stock would lose about half of its value from here in the short term, but regardless, I do like Workhorse as a company, and I think they are set up for long-term success. Please do keep in mind that I am not a financial advisor, and this video is not meant to be financial advice, but I'm simply sharing my thoughts on the matter. Never invest blindly, and always do your own due diligence into whatever company you're investing into. That wraps it up for today's episode. Thank you all for watching until the end, and let's grow this community together. Until next time, take care and invest smart.